Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. Stocks across the Asia Pacific rising after U.S. and global equities hitting fresh highs as the Fed's rate cut boosting sentiment. The value of global shares nearing $145 trillion.
Yeah, the next thing to watch is, of course, the call between Presidents Trump and Xi later on today with their trade truce and the fate of TikTok on the agenda.
And chip makers are in the spotlight. Nvidia betting $5 billion on rival Intel, while Huawei unveils new technology aimed at chipping away at Nvidia's lead. Good morning. Welcome to the show. Happy Friday morning. As we go into the final session of the week, we're looking at some pretty hefty momentum coming into the session today. We have the Russell futures on your screens right now, that contract specifically on the back of that massive move up overnight. Yes, everything else was on a record. Of course, these four benchmarks, the outperformance that underscores the broadening out of the rally down the market cap spectrum. All that said, let's have a look at what else we're tracking going into today. The one item on the agenda, not necessarily a big event risk, but certainly something we'll be tracking given, of course, the inflation read that's come out earlier this morning will be the BOJ. Dollar yen is trading at about the highs of this multi-week range at about 148 and change. We just came from a central bank decision, of course, out of the Bank of England, and the sense there is clearly a hold, and then perhaps some caution going into further rate cuts, at least in consideration of rate cuts going into the end of this year. Just to look at 10-year yield, of course, and gold futures going into the weekend as well. Okay, what happened overnight? Not really a lot of stories as far as the Chinese equities were overnight are concerned. We'll have a deeper conversation around Baidu in a moment here, really given how far the stock has come up, and certainly the big week we've seen so far in terms of semiconductor development. Change the page, please, as far as the Chinese market is concerned. You had at Alibaba store in Unicom, the Huawei conversation around them unveiling that sort of 3-year runway in terms of them being able to challenge the Nvidia story. 0.3% to the upside, and yeah, we're looking at some strength. Oh, by the way, we do have some bond auctions today as well. A 10-year and a 30-year is on deck today, given, and we'll see whether or not this melt up in yields recently affects demand. But suffice to say, we haven't really seen that play out as far as the bearish side of the conversation is concerned, Yvonne.
Yeah, we'll see how that all plays out. But as you mentioned, with these records that were hit in the U.S., right? I think it's only happened 25, 26 times in the last century, where you have the S&P, the NASDAQ, and the Dow all at all-time highs. And that's the first time I think we've seen that since 2021. So yes, as you mentioned the tailwinds, you add that with a Xi and Trump call to end the week, and there goes your rally then, really the catalyst for that here as well. So certainly that's one to watch. 3,800 is a level to watch on your Shanghai Composite here as well. We talk about stocks like Zijin Mining, given that we are getting more details of the IPO for Zijin Gold now. Baidu and Semi is certainly one to focus as well. CGB sale. We have Macau visitor arrivals data coming through later on this afternoon, and we are in that window also for some FDI data.
Okay, just to also mention, since we're talking about central banks here, we're coming up the Fed, the Bank of England, we have the BOJ coming through. The 2-year Japanese bond yield actually is out rising. Well, it's now at the highest level since 2008. Call it the 17-year high. And, I mean, the question is not whether they move today or they don't move, but when they really will move. And I think the window out of Bloomberg Economics is that they will move in. Earliest window would be late next month.
Only viable option, according to Taro Kimura, because you start to get really busy during the political agenda when this new government or new prime minister is going to start pushing for a budget, pushing for fiscal expansion, maybe things that might complicate if you're talking about raising borrowing costs at that time.
Yeah, well, you can wait a few weeks, right? We waited a few weeks for many other things. We talked about this everything rally that's taken place and really underscored by well, not a lot of negative surprises coming through out of the Fed, right? So we've really had a well-behaved bond market. In fact, the MOVE index actually dropped to the lowest in about 3 years overnight, and that's leading to this massive melt-up in global equities. And we're now nearing this next milestone, which is 145 trillion as far as market cap is concerned. So it's really been a good year to be long-risk assets.
Or anything, really.
Yeah,
I mean, you take a look at bonds, too. Bonds have also rallied in the face of this risk rally as well. We're going to talk to to Amy Patrick from Pendal a little bit later on that as well. But even the fact that the Russell 2000, the small caps in the U.S. were also rallying was quite telling, right? Because you start to see that maybe this rally can actually extend and spread to other parts beyond just the Mag 7 right now.
Yeah, so as Yvonne is pointing out, you have the four major U.S. benchmarks closing at record highs. And you had the Fed resuming its easing cycle, so it's all angels and butterflies.
Triple crown.
There we go. Last time was 2021.
Yeah.
That you had all for one. I swear for the.
There you go.
Yeah, for the kids of the 90s.
All the millennials out there.
Paul Dobson is with us, our executive editor for Asian markets. Paul, so what do we not see here? That's the scary part for me. But I'm a concealed pessimist. But yeah, take it away, Paul.
I think we all are, David, as seasoned journalists. We've seen the rallies, we've seen the crashes before. I don't think that there's a lot, kind of blind sides on the immediate horizon. Look at credit spreads, right? The tightest since the 1990s, showing you that people are very happy with the strength of corporate America, as well as what we're seeing in the equities market. And like you said, bond yields at a government level are still relatively well behaved as well. Now, there's the geopolitics, right? There's also these inflation risks. Are they well contained? There's you could have concerns about central bank independence. You could have concerns about private credit and the risks that are getting sort of squirreled away under the radar there. But all of those things, I think, are for another day, not for this week. We've got the central bank, not only the Fed, but a couple of other central banks already this week cutting interest rates, and more likely to come around the world in the coming months as well. Lower interest rates reduces the cost of money, helps corporates, helps the economy, helps people remain bullish on equities. When I was in London last week, the people that I was talking to there were still very confident that there's more cash to come off the sidelines, and people wanting to invest, wanting to allocate more to equities, wanting to allocate more to fixed income for that matter, and liquid alternatives. Pretty much right across the board there was interest in investing, even though, as you say, they were at stretched levels and people will be looking over their shoulders, and at some point we get towards year end and maybe people will start to take profits. But for all that, plenty of record highs, like you said, across those US gauges, plenty of record highs in Asia as well that we've been stretching again, in Japan, in South Korea, for example. Keep your eyes out for the next levels. We're not too far away, I think, from reclaiming the highs in India as well later on today or later on in the next few weeks.
We did see a little bit of profiting possibly in China yesterday. Obviously, we've talked about China tech all week. Is it time for some sort of breather here right now as we count down to this Trump and Xi call later on today?
I mean, the Trump and Xi call should give people hope for, the smooth waters as well. And the China tech space has been going at a phenomenal rate recently, but there's still the same sort of thing. Plenty of cash to come off the sidelines, right? We've got this idea that Chinese households are sitting on a load of cash still that they need to deploy at some point, or they want to deploy at some point. And equities are offering a far more appetizing investment opportunity at the moment than fixed income with very low yields, or property, which is still not out of the doldrums. So, if you get a little bit more of that momentum, then who's to say that the rally can't continue? It would be nice if it was at a slower pace. We have seen some foreign investors taking a little bit of cash out of that, and that has been slowing some of the rally. We've seen a few of the moves out of ETFs, the ones that were bought by the so-called national team. So again, a little bit of a way to put a bit of a brake on it. But at the same time, people are excited about the prospects of the China tech companies, of the China new economy companies, really. And that's why we're seeing these really big gains right across the market.
Paul, thank you. Paul Dobson there joining us out of Singapore, and what to expect later on today. Let's talk about that call now. President Trump has indicated that he may further extend the trade truce with China when he speaks later on Friday with President Xi Jinping. The call will be the first direct engagement since June between the two leaders, and the issue of a TikTok sale should be high on the agenda. Let's bring in our chief North Asia correspondent, Stephen Ingle. What's being teed up for this call?
Well, it's going to happen about 12 hours from now at 9 o'clock p.m. Hong Kong time. time, which is 9 a.m. East Coast time. And it's an important call, no doubt, because it not only potentially gets the two leaders agreeing on the framework agreement that was reached over the course of those high-level talks, obviously the most recent ones between Besson and He Feng in Madrid, but also in Geneva and in London. And that will kind of be the top agenda item on a list of very contentious trade issues and national security concerns. And just getting these two people to talk for the first time, meaningful engagement since June, is important. Now, why is TikTok moved to the top? Well, it seems like it's something that can be delivered. We still don't have all the details, though. We know that there's a consortium of what Donald Trump calls all American investors going to be buying the U.S. side of it. But is it going to be a licensing deal? Is it going to be an outright purchase? Is it going to be, what's going to happen to the algorithms?
Yeah.
What's going to happen to the data? I think the algorithms is probably the biggest question. Is China going to be licensing their technology to the United States but still keep ownership? Or is it going to be down below 20%? Or are they divesting completely? I mean, so many questions. The devil will be in the details. And I think Donald Trump has even alluded to the fact, well, if Xi Jinping in the call is not on board, well, we can still walk away. This deal, and I'm paraphrasing, but this deal is not necessarily done. He, however, has flip-flopped on the TikTok issue. The first term he was against it. Yeah. Now he's already claimed that, well, it helped him win the election with the younger votes. And he says this is an entity in the United States that could be worth tens of billions of dollars. I hate to see value like that thrown out the window. So he's inclined to do the deal, but there has to be the right mood on that call.
I mean, we've just showed it to the viewers, right? There's a lot of potential items in that on that agenda.
Yes.
Soybeans, for example. A lot of these things are very hard to find any resolution to. And, do we get movement? Do we get a gesture? Do we get some peace offering?
Well, I think that's why the TikTok deal, if it is agreed to and goes through, you can kind of see that as a way forward for, I guess, not congenial, what's the right word I'm looking for? Just, facilitating some sort of agreement between the two countries at a time when they, are far apart on many issues, especially trade. Yeah, it'll be a civil agreement, but with government intervention, right? To use the pun there. But again, the FT is already reporting that China has offered a bit of an olive branch by dropping this antitrust investigation into Google, which they launched, let's be honest here, they launched when the Trump administration launched the tariff regime. So, and Google doesn't really have a meaningful presence on the mainland. Yes, Android is licensed to many different phone makers, so they do have an outsized presence on the mainland. But that was what that investigation was into. The FT is reporting that they're dropping that kind of, an easy give for China to the United States. Soybeans is a more difficult one because that was part of the Trump administration's... the first one. Yeah, the first one. And China didn't follow through for various reasons. There was the spy balloon, there was COVID, there was all kinds of issues that kind of interrupted China's pledges to buy soybeans. And China since then has diversified its sourcing to Brazil and elsewhere. And this is the harvest season in the United States right now. And farmers in the Midwest are nervous because they're not getting the orders, where the order book would be filling up right now. So we're already seeing the Ag Secretary, Mr. Rollins, talking about a possible aid package to U.S. farmers to alleviate this. So I think soybeans is going to be a little bit higher up on that phone call as well. Boeing jets, that's a usual deliverable, obviously, and China needs that. They haven't bought a lot of Boeing jets in a long time because of geopolitical friction. And rare earths. We just got customs data out of China saying August, it was the biggest jump on record dating back to 2012. So rare earth products, including those magnets, are starting to move. So that could alleviate some of the tension.
Okay, well, just to underscore how multifaceted this relationship really is, Stephen Engel just really outlining the many fronts and potential fronts we could get more progress there. Coming up here in shows, we're talking about this tech rally that's been really front and center if you think about many of the strategies out there this weekend. Shawn and his team actually put out this call in Baidu, which arguably kicked off this latest leg higher. in the stock price there. So he joins us at the bottom of the hour in about 15 minutes or so.
Yeah, but first, Pendal Group joins us as we wrap up a busy week for global central banks. Look at the rates outlook from Amy Patrick coming up next. We're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. Keep in mind, we are all still on typhoon watch there. Strong wind signal. Number 3, Typhoon 3, coming in at 9:20, about 6 minutes from now. This is The China Show. Happy Friday.
Welcome back. So we're going into the session today with futures to the upside, cash markets to the upside. We woke up here in the Asia Pacific to the Dow, the Nasdaq, the Russell 2000, the S&P, all at records. The everything rally is what we're calling it. S&P's up 5 months. U.S. Treasury yields, a 10-year yield specifically, is down for 2 months or so. So this calm in the bond market is really creating this platform on which risk assets are rallying. But then again as well, bond markets have also been doing well. Let's bring in Amy Patrick out of Pendal Group, of course, this Goldilocks scenario. And whether or not, Amy, we do see something that might upset the calm in these markets. Amy, of course, is head of income strategies there. Joins from Citi. Good morning, Amy. Yeah, why don't we start there? Do you see any potential risk short term, or should we just enjoy this ride for now?
Well, I think we need to separate the story of what's going on for bonds and what's been going on with equities. So the story I hear a lot about what's driving both is that because, the Fed has been talking more about the downside risks to unemployment and the US labor market, that then means the door is open for more Fed cuts. If interest rates are going to go lower, then that supports equity market valuations. Therefore, both can rally. Whereas I think what's been going on a little bit more behind the scenes is a slightly separate story for both bonds and equities, and probably relates more to the impacts of tariffs, right? So if we think about how long we've been waiting for the effects of tariffs to show up in inflation, and print after print in the US, you're just not really seeing that come through. I mean, even this week, you had the import price index in the US showing hardly any inflation coming through on that side. And so whether it's importers, whether it's producers, whether it's suppliers in the chain, they're taking all the burdens of tariffs, and therefore if inflation is under control and we don't need to worry about tariffs on inflation, then bonds can rally. So the bonds tick. But then on the equity side, I think, you could ask the question, well, if companies are absorbing all of these tariff burdens, shouldn't that be bad for equity markets? But when you look at, the tariff-affected companies' share of the S&P market cap, it's like, 1%, definitely less than 2%. And, very similar numbers in terms of their share of revenue, their share of EBITDA, in terms of the whole index. So at an index level, it's just a nothing to see here story as well. So I think that's why you've seen this kind of Goldilocks situation. As for the risk going forward, well, I would say on equities, simply just because a market hits a new high is never a good reason to say, well, this is it. This is the time to get bearish. But I do see evidence, at least in our local markets here in Australia, but a little bit in global indices as well, that the investor behavior from the price action that we see is tending towards a lot more of herding and a lot less about independent investment assessment of the markets. That is a little bit of a question mark for me as to how long this rally in equities can sustain.
When it comes to bonds, though, the fact that they're rallying, the best trade, it seems like this year, has been the curve steepeners. Do markets need to actually start really factoring in politics, playing a bigger role in monetary policy? And that, if that's the case, is there an argument that the curves need to be more steeper from here?
Yeah, so traditionally the curve steepener usually comes into play when the Fed is in cutting mode, right? Or at the point where the cycle has pivoted and they've stopped hiking, they're starting to talk about cuts. But if you think about the context of how the curve has moved since the Fed has pivoted its stance and has been cutting, even though we started at extremely inverted curves, the absolute move of the yield curve in terms of steepening has been ginormous up until this stage. And those who argue that curves should still be a steepening are probably looking at it from an absolute level perspective. 2s10s is still only, in the mid-50s, and most argue that, by this point of the cycle, it should be in the hundreds, if not 150. So I think that's where the arguments come from. And then you start drawing arguments from politics and from, central bank independence. And is it really okay to accept this kind of term premium? Shouldn't we be demanding more as a reason for why this curve trade should kick on a little bit more? But I still go back to the economic fundamentals. For the curve to steepen meaningfully more from here, given how much we've already steepened, I do think that you need to see some kind of, Fed pivot towards a much more dovish stance because they see something, some kind of an emergency happening in the economy. And from what we just saw from the FOMC this week, absolutely not.
Yeah.
They revised up their expectations of growth, they revised down expectations of unemployment, and slightly revised up their expectations of core inflation. This is not a Fed that's on panic mode at all.
And your portfolio focus recently and maybe into the next few weeks would be what at this point, Amy?
So in my portfolios, I see duration as being extremely hard. My portfolios can't go short duration. If I could, I'd probably be slightly short right now, because the indicators that I see, both for our domestic economy in Australia, but probably more important for your viewers, the US economy, is just that everything is fine, much like what Powell talked about in the presser this week. So from a jobs perspective, from a growth and underlying demand perspective, the US consumer that we've been expecting to buckle for years now, and they're not buckling. Everything is hunky-dory. So from that perspective, I see in the near term, if anything, if there's room for disappointment, it's probably in the bond markets for what's priced in for a couple more cuts to be taken out, or for the Fed to take longer to get back to what they believe to be a neutral policy rate from here. But so in this environment, it's really difficult for me to get short term very bullish on bonds. But I do think that it's a matter of time when you do get this kind of herd thinking and herd behavior happening in equities, and if I start to see more signs that the way equity markets are moving are becoming more and more divorced from the company fundamentals and from the economic fundamentals, then that opens up the gap for a bit of a shock to the system that may cause a bit of a reset in pricing. So near term, probably slightly bearish on duration, but longer term, I see an opportunity, but only after a reset.
Amy, thank you. Amy Shea-Patrick there. Have a great weekend. Head of Income Strategies at Pendal Group, joining us from Sydney there. Your pre-market is just opening up here in the Hang Seng, and there you go. We continue to see slight gains here. Futures are slightly to the downside here today. 7.11 for dollar China here this morning. The fix just up there. There you go. 7.1128 this morning. This is Bloomberg. All right, it wouldn't be the China show if we're not talking about Labubus, right? I mean, talk about when it comes to the shares down some 2%. So there has been some concerns about the resale price of Labubus. Well, that seems to be the case today. But Citi reaffirming, saying, look, don't look at that as a negative right now. The restocking initiatives actually cater to real demand and really improving the customer experience there. So that actually should help IP popularity. So
yeah. I mean, the fact that we're looking at inventory levels now, almost like when you look at oil prices and IEA stockpiles.
It's a commodity.
as a bullish call. There's a partnership that was announced, strategic 5-year partnership between the two companies. And we'll talk more about this at the Open, which is coming up. This is the China Show. Over 40 seconds to the opening bell. It's been a fantastic week for risk assets globally. We've seen a bit of consolidation in the onshore markets the last couple of days or so. 3,800, the level to watch. We'll talk more about that later. Hang Seng Index right now slightly to the upside. Any clues from overnight were not as strong as we've seen in recent days, but we'll see. Of course, we have a couple of seconds to the Open, and we'll see, of course, what happens here going into the Open today.
Yeah, I mean, even starting yesterday, you started to see a little bit of retreat towards late of the session there, because maybe we're waiting for this Trump call to see if there's any sort of breakthroughs that come through when it comes to TikTok, and whether that leads to some sort of summit between the two leaders later on on this year. That certainly is probably the next sort of milestone that we're watching out for in this market. But we're still kind of ending things on a pretty positive note when it comes to stocks, right? Given just the massive rally we've seen around Chinese tech this week. And, this whole re-rating, it almost seems like around the whole AI cloud trade. And Huawei, with the news yesterday about them developing their own chip there to challenge Nvidia, that certainly is going to be adding a little bit more to that trade as well. But you take a look at how onshore markets are doing. We're pretty much flat right now. Watching very closely what goes on when it comes to the tech space. There you go, Capricorn Tech. That's down some 2% here this morning. And we're watching very closely what goes on when it comes to the renminbi, because that fixtures came out as well. The spot and the fixing rates are actually, that gap is really closing quite a bit, right? So in some sense, it seems like right now, the supply and demand for renminbi seems to be quite balanced in some ways, and maybe it doesn't need the central bank's sort of help in sort of anchoring the currency anymore. That's certainly something that we've seen of late. You flip the boards and see how Hong Kong is doing as well, right? So, obviously, yesterday it was a bit of profit taking in some cases here, but tech still seems to see pretty strong right now. We're up about 0.1%. At least we're extending that. Alibaba seems to be one of the main drivers of that right now. Alibaba is up about 0.6%. Baidu, though, is slightly down about 0.8%. And of course, we're watching the likes of course, Baidu, given we're going to get Arete, Shawn just a couple of minutes, of course, after their upgrade. That stock really has gone gangbusters this week, of course. So certainly that's one to watch. Let's take a look at SMIC. Let's take a look at Hua Hong, some of these homegrown sort of players there. And we are continuing to see some decent gains here when it comes to both of those. We're up more than 1%. Zijin Mining, so we did get more news about the IPO for Zijin Gold, right? So we know they're going to be listing on the 29th. They're seeking about $3.2 billion. This is going to be the world's biggest IPO now since May, of course, CATL. So certainly that's going to be the big one to watch in the next coming weeks as well. And then we have a trading debut today. So we're talking about GenFleet Therapeutics in Shanghai. So There you go. Doubling the price on the first day of school, Dave.
Yeah, well, that specific stock, Yvonne, I'm looking at it just now. So it's actually hitting on really two themes with very strong momentum behind it. One is, of course, this equity market that's been on fire in terms of equity financing, raising equity financing. The other thing is it's a biotech company, right? So those two things are, 121% now as I speak. Isn't doing as well as GenFleet, but has done exceptionally well still. Has been Baidu, right? So where are we as far as this trade is concerned? I'll show you one chart that actually underscores how quickly the stock has actually risen. The blue line on the screens is the share price. The yellow line is the 12-month consensus price target from analysts. For the very first time, and you don't normally see the actual share price trading above the target, right? Well, that's happened because of this rally that we've seen recently. In fact, I think some of the other things that we're tracking here as well, stock is up 51%. It's a top 5 stock on the Hang Seng Composite. It's added some $16 billion. So what now? What are the opportunities still? What's been baked in? What does the company need to deliver to justify where we are as far as current valuations go? Let's bring in our guest, Shawn Yang, Senior Research Analyst at Arete Research. They upgraded Baidu, of course, from sell directly to buy earlier this week, citing search engine operators' new in-house chip venture as having the potential to more than offset, this is a very long introduction here, the online advertising business. Shawn, good morning, and a pleasure to have you on the show. The bull case is quite clear. We can look at potential maybe holes in the bull case, but what is the risk right now at the current share price level? Let's start there and work backwards.
The current risk, I think that Baidu's advertising business has always, they always have some issues with advertising businesses. So it's like search business is under attack by a lot of other players like Xiaohongshu, Little Red Notebook, and also Tencent WeChat Search and Douyin Search. So the advertising revenue will continue to decline I think will continue to decline for a couple of years. The other thing is that the current market expectation for the cloud and AI chip and autonomous driving seems that are rising. But whether Baidu could deliver the numbers just to prove that they are making progress, I think that is also something to watch out in the next several quarters.
Shawn, we spoke with Macquarie's Ellie Zhang yesterday about that very topic, right? They need to stabilize the struggling ad business. I just want to play a clip here. Just take a listen.
Investors started to get much more excited about the hardware side, which is their self-developed Konyn chip. But at the same time, I guess the flip side of that argument is Baidu's core search remains heavily under pressure. Right? So I think for investors, we always have to kind of debate the pros and cons. And of course, in Baidu's case, whether they are able to achieve kind of more of a stable stage for their search decline would be the key catalyst to watch out.
Shawn, your argument is that this chip venture for Baidu is enough to offset at least the weakness in the online advertising business. In terms of Konyn, what are you looking out for the most when it comes to this chip now?
Right. We did some of part analysis. Basically, with our latest target price, we think like advertising only takes 19% something of the whole valuation, and cloud and chips takes roughly about 60%. So, in terms of Konyn chip, because we have already seen some early stage announcements. For example, they announced that China Mobile, China's leading telecom company, purchased large amount of Konyn chips, and also we have seen that I think China Merchant Group, which is also leading state-owned enterprises, also start to purchase chips from Baidu. So I think that we are going to see more similar announcements going forward, and people will. I think after this announcement, after more external clients start to purchase Baidu Konyn chips, then more people will recognize the quality of Baidu chips.
Yeah, okay, so Shawn, let's put that together over a 12-month view and what to expect as far as whether that's margin, trends in the profit margin or the profit itself. How do you think this shows up, or hopefully shows up in financials these next 12 months?
Because Baidu disclose very limited information now. Basically, they bundle a lot of things like autonomous driving and cloud and chip businesses together into other revenue. So I think my suggestion for the company that probably they need to break down a little bit, at least to let investors know what's the number percentage of this revenue mix. And the other thing is that we are probably going to see the other revenue growth very fast and likely to surpass advertising revenue very soon. And by that time, I think that people need to do to break down each businesses just to have a more careful analysis. But going forward, finally, our discussions will return to the company's revenue growth and other profit growth. So finally, that Baidu needs to deliver concrete numbers to support their stories.
Shawn, I want to broaden it out a bit. I know you also upgraded Alibaba price target there a few weeks ago. Obviously, there's a lot of optimism around the cloud business there as well. And there's a lot of CCTV reports just this week saying that their chip design unit T-Head has also developed some sort of AI chip that is on par with Nvidia's chips as well. There certainly is that sort of narrative that we're seeing when it comes to even Huawei's chip of late. I mean, how can we measure whether these claims are true and will hold, and whether actually these companies can actually scale up to a point to reach mass production?
Right. I think that's the most important thing I've seen here is that there has been very strong demand in China for the AI chips. That's mainly because I think that there's also very high demand for China's AI developments. All the industry are trying to embracing AI, but on the other hand, there's relative shortage of AI chips, and I think that there are a lot of articles describing this situation. So I think that probably takes some time for these Chinese domestic made chips, either Huawei, Cambricom, Baba, or Baidu to catch up. It's definitely not very easy to compare their capability with Nvidia now, to be honest. But I think it takes time. And I think the other thing is that if there are more enterprises, clients are using China domestic chips, which on the other hand definitely strengthen these companies, like Huawei or Cambricom or Baba or Baidu, their capability and and just to try to push them to produce more and improve the whole like product quality. So it takes some time. I don't know how long it takes, but I think that's something that's definitely going to be an exciting investment thesis going forward.
Shawn, the one stock that has not ridden this recent wave is Meituan, and we understand the fundamentals of the outlook don't seem as rosy compared to the others. You currently have a sell rating on the stock. What would make you change your mind here? And do you think we'll get that catalyst over the short term on Meituan?
For Meituan, I think the problem is that they are still like trapped in a very intensified competition in like food delivery businesses. Definitely, there are some catalysts. For example, Meituan also launched AI agents. I think like just last week or sometime. But I think that seems that there's a lot of enthusiasm among the like users. And the other thing that Meituan is also trying to expand like globally. But I think that's the most important thing, that when can we see relatively easing competition in food delivery? I think that is the most important question for Meituan.
Shawn, thank you so much. Shawn Yang there, Senior Research Analyst at Arete Research. Of course, we're going to check this IPO, or at least a trading debut today, for GenFleet. So this is, of course, the biotech company that is an H-share listing here today. And yeah, we talked about doubling in price on the first day of trade. We continue to see, there you go, 120% upside this morning when it comes to that particular stock. We're also talking about a very big IPO coming up, right? We're talking about Zijin Gold, seeking to raise $3.2 billion through its IPO in Hong Kong, which is said to be the world's largest deal of its kind since May. Trading is scheduled to begin on September 29th. Now let's bring in Manuel Balgori, who leads our APAC deals coverage here on yet another big one coming through in Hong Kong. What to expect on the 29th?
Another big IPO. It's exciting. Just coming back after the summer holidays, and big IPOs taking place. This one is a good one. Zijin Gold, definitely the biggest of its kind since May, as we've reported, set to begin trading next week. We've seen a good quality of cornerstone investors piling in. So let's see. I mean, still early to tell, but it feels like it's in high demand. It's a company with a good track record for sure.
Okay. Well, who are the backers of this one? In terms of the institutional, who are the ones that are... just to give us a sense, really, of what that institutional backing is.
Yeah, the cornerstone investors, David, as we know, here in Hong Kong, they get a certain allocation.
Yes, a size.
In return of staying or keeping the stock for at least 6 months. Those so-called cornerstones include the likes of GIC, Millennium, Hill House. So those are big institutional, reputable, and well-known investors. Interesting, for instance, Millennium, right? That we've seen them coming in a couple of public markets deal recently. I mean, Hill House, really solid track record, and GIC, obviously, as well, a big name. So just, I think when you see those big names piling in, it's always, a good, kind of solid foundation for what's to come. But obviously, we'll see how the books build up over the coming days.
Okay, there we go. 29th of September is the debut date.
Perfect timing, right? I mean, gold prices are at records. Why not?
Absolutely.
Yeah. It's also a month before Halloween.
Oh, yeah. Well.
Oh, ooh. All right. We'll see if we bump into the Millennium guys, which I tend to see some of them every now and then on a Friday afternoon. Anyway, okay, you can get an insider's guide to the money and people shaking up the finance hub here in Hong Kong. It's out every Thursday, so the latest one, of course, is out. You can check. Someone has an entry in that newsletter.
Yeah, check it out.
Yeah.
I contributed this week.
Plenty more ahead. This is The China Show.
Well, AIA Group CIO Mark Konyn says while China's property crisis is still hanging over the economy, market sentiment is clearly improving, with foreign investors seeking opportunities now. Konyn was speaking at the China Show subscriber event after a recent visit to the mainland.
Sentiment has definitely changed on the ground, that's for sure. I don't think we've seen the back of the the onflow, the after effect of the slowdown in residential property. That's still a spectre which is hanging over the consumer. But we've clearly seen a mobilization of resources and an alignment of policy, which has really galvanized confidence. And it's palpable. You can see it. I spent a day in a workshop looking at China logistics and data centers. Extraordinary growth. All of the things that we've been talking about, Steve mentioned 35 years, all of those things that we always talked about on enormous scale, they're now coming back into play. And there's a real level of enthusiasm and optimism around that. And dare I say it, you're even starting to see foreign investors come back to China. You're starting to see some of the big global pension funds, the sovereign wealth funds, starting to come back in and realize that there's opportunity there that they should be participating in. And there's a sense that, if this is we're now scraping along the bottom, this is the right time to be rebuilding positions.
You've invested in Hong Kong for a long time. The Hang Seng Index. Can I trust this one? Because we've had our hearts broken a few times in just 18 months, not let alone the time before that.
Trust is a big word. I mean, can you make money? Yes. I think that's more the point, and the fact that it's driven by policy as well. So it's really an alignment of policy and action, and getting the IPO market started up here again, and it's phenomenal. On a global level, and it's really infused investors once again. So yes, you can trust that this is real, and there's a lot more to come.
Do we regret not taking advantage? Do you think we will regret not taking advantage of the treasury yields on the table, especially when we think about the end of U.S. exceptionalism, the role of the dollar? Like, where is your head around the entire conversation?
Yeah, so firstly I would say that we don't trade the long end. We don't get rewarded for taking rate risk. So what we do is try and we hedge out as much rate risk as possible. Rate volatility costs us capital. So we try and neutralize that as much as possible. But we do take tactical positions, and we have, during the course of this year, there have been opportunities because of the volatility. And I think that's been one of the sort of trademarks of the market this year. You have tremendous volatility in rates across the curve. I think where we sit today is that most of the action is going to be the short end. That we're going to see the short end give up, but the long end could go up a little, but not significantly so. So I'm not sure we would be aligned with that and taking more tactical moves. We're very happy with rates where they are at the long end.
A large book of your policies are dollar-based.
Yes.
How does the overall confidence or lack of confidence on the dollar longer term mean for your sales and for your investment opportunities now?
Well, typically when we've seen dollar weakness in this region, it's been positive for the economies across the region. It gives a little bit of headroom in terms of policy flexibility. But what we really want is we want to see liberalisation of the capital markets across this region. The biggest constraint we have in terms of growing our business is, can we find enough deployment? Can we find enough assets to deploy? And if we look at the capital markets across this region, extremely constrained. So here's an opportunity, slightly weaker dollar in terms of the trend. Will we see the liberalisation that we're expecting? Will we see taking advantage of that headroom? It looks like we're going to be disappointed again. So yeah, so out across the region, China's a big play. This move for offshoring production to avoid the impact of tariffs, sort of aligning with what we saw in previous decades with Japan after the Plaza Accord.
Right.
That's the sort of thing that we're very much focused on, because it's not the same story being replayed again, because these tariffs are rolling out across the whole region. So it's very, very finely balanced.
Yeah, that was Mark Konyn, who joined us, of course, last night at our subscriber event for the China show, just talking about many things there. Among the many other things, of course, that weren't included there in that final cut. But yeah, in any case, of course, you could rewatch that interview that we just showed right now on TV.
And thanks for coming to our subscribers too. Yeah.
Yeah, I mean, ended quite late, relatively speaking, for our usual habits.
But it was a good time.
I'm nursing a bit of a headache. I wonder why.
It struggled us a little bit, but we'll get through it. It's Friday.
Yes.
TV Go. You can check out more. This is Bloomberg. Some corporate stories that we're tracking for you today. Shares of GE Healthcare closed lower in the U.S. after Bloomberg reported it's considering selling a stake in its China business. Sources say a potential transaction may value its China assets at several $billion. If it happens, GE Healthcare would join other firms evaluating options for their China businesses amid fierce domestic competition. India's securities market regulator has cleared the Adani Group and its billionaire founder Gautam Adani of some allegations raised in 2023 by the U.S. short seller Hindenburg Research. It's found no evidence that Adani used so-called related party transactions to move money into its listed units. Adani has welcomed the decision, repeating that the claims made by the now defunct Hindenburg were baseless. All right, Dave, you've been tracking. If we had to make a playlist for this China rally, you're coming up with some names, right?
Yeah, well, I mean, I think we're giving away the title. Weren't we joking the other day? We were bantering on this, right? That my plan was not to get a haircut until either I think the Shanghai Comp reached 4,500 or the Hang Seng Index top 29,000.
Yeah, no, your hair cannot stand it. You need a haircut like now.
Well, our viewers just have to live with it. And the peg was, weren't we going for Michael Bolton, right?
Oh,
that was the peg.
That's ambitious, Michael Bolton.
Yeah? Well,
not everyone can rock those waves.
They can pull it off.
No,
yeah. Nor do I have that husky baritone vibe that he has going. But then again,
you're good with charts, though. Tell me about this.
Yes. We've been leaning on that, the support level. We like nice round numbers, right? 3,800 has really been that level, with the exception of one day where we closed below it. For the past several weeks, we've actually closed above that. We bounced off that several times. We did so again exactly there yesterday, and that seems to be where the market thinks the current floor is, at least on the Shanghai Composite. We'll ask this question actually to Tommy Fang out of UBS, who will be joining us in a couple of minutes' time. Keep it here.
If you have weekend plans, we don't know what's going to happen. T3 is going to be happening in the next few hours or so. So certainly that's going to be the one thing to watch here. Preschools, kindergartens already closed for the day. So yeah, it's going to be a long weekend for us. Maybe we have to hunker down. We'll see.
Ahead of the big one next week, which is the one we're tracking as well, going into, should be Tuesday, Wednesday, right? I mean, we've barely had sunny weekends here in Hong Kong.
No.
We've had one or two. Very, very recently, but they were just scorching hot. So
stock up while you can.
Absolutely. A lot of stories across these markets today. I think the latest one, in fact, in the last hour, so we've gotten a lot of corporate news. We'll start things off here with Xiaomi and this software fix and this recall. Just under 117,000 cars. The market doesn't seem to be reacting quite a bit. In fact, it's going the opposite way right now. We were down as much as 2%. Volumes were picking up, though, going into today. And as you can see, we are just wrapping up while we're going back to Xiaomi. Okay, the other story is this strategic partnership between CATL and Li Auto, 5-year partnership, car safety, battery safety, and stocks are doing this. The big news could come in the form of, the big event will come, of course, at 9 p.m. local time, which is that, and we'll talk more with Steve on this phone call between the two presidents. Markets don't seem to be extremely bothered or building up hedges ahead of that. In fact, when you look at implied vol overnight on dollar China, you look at over the past month or so, markets don't seem to be worried too much over this going into that strict meeting.
It really hasn't been for months now, right? We really haven't been talking about trade. It's really all about AI. It's really all about all these thematic sort of investing in this market. But I think it's because it's the fact that you also heard from President Trump saying, we probably could extend when it comes to some of these truces. So certainly there's a lot at hand here, especially when it comes to TikTok, right? And that certainly has been put on the top of the agenda. Let's bring in our Stephen Ingle, Chief North Asia Correspondent, on what to expect from this call in less than 11 hours or so.
That's right. So obviously trade is the big issue
behind the scenes. But TikTok has risen up to the top of the agenda because it's one that at least Donald Trump is telegraphing that it could be delivered. And that's what everybody's looking for after all these months of turmoil with from Liberation Day to the threats and the realization of tariffs and just the icing of Donald Trump, if you will, by Xi Jinping not taking a call until really more recently, and we're going to get it in about 11 hours' time. You just had this sense that we need some deliverable because you can only kick the can down the road so many times. We've had so many truces, right, and extensions, and the current one expires November 10th, and Donald Trump, as you've just alluded to, why the markets are not necessarily on tenterhooks, because Donald Trump keeps on telegraphing everything that's possibly going to happen, right? And he's saying, well, we can extend this again under the current terms. So right now, the trade friction seems to be on the back burner. The big question is, can they get this framework agreement that was done over several high-level meetings between He Lifeng and Scott Bessent and Jamieson Greer? Can they get it across the line so both leaders can take deliverables, okay? Right now, they're doing the leveraging and the pulling the levers to see if they can get the better side of the deal. What we need are the details of the deal. What's going to happen with the algorithms, right? Is this going to be a licensing deal, or is it an outright purchase by this consortium that the White House has talked about between Oracle and Andreessen Horowitz and Silver Lake Management? We simply don't know what it's going to look like, the U.S. entity. Donald Trump says it could be an entity worth tens of billions of dollars. Seems quite exorbitant, but he says, why would you throw that kind of value out the window? So he's on board with it, but he has to see what kind of tone is going to be struck in this phone call. How long is the call going to take? And is it going to be bogged down in their differences? Or are they going to find that common ground on TikTok? Because China, so far, they've telegraphed over all these years that TikTok's been in the focus of national security issues, somewhat reluctant to give it up, right? So what's this going to look like?
Yeah, in fact, let's listen in on how President Trump actually framed, going this TikTok conversation going into today, which really underscores why the markets so far aren't too worried about this. Let's have a look at that, guys, if we can.
So what we're doing, and we're speaking to President Xi on Friday to see if we can finalize something on TikTok, because there is tremendous value, and I hate to give away value. And we're doing it in conjunction with China. But we are getting, the United States is getting a tremendous fee plus, I call it a fee plus, for just making the deal. And I don't want to throw that out the window. We're pretty close to a deal. We may do an extension with China, but it's an extension based on the same terms that we have right now, which are pretty good terms.
Yeah, Steve, who would have thought that TikTok would be the low-hanging fruit among the many other prickly issues that they need to get over the line?
But still not a lot of detail there.
That's
right?
true.
A lot of hyperbole, not a lot of detail. So I'm a stickler for detail. I need to know, then I can make up my mind whether this is a significant move or not. Yeah. What is this deal going to look like? And does this pave the way perhaps for further cooperation on other more prickly issues? Because there are a lot of prickly issues, obviously, that have been the bugaboo for trade. No doubt soybeans is going to be one. We're going to talk about that, in greater depth later this hour. But soybeans, right now it's the harvest season in the United States. Farmers in America are quite concerned that they're not getting the order books filled for their soybeans because China, let's face it, they've diversified their sourcing to Brazil and elsewhere. They didn't fulfill their commitment in the first trade deal that Trump made, but pandemic happened, a lot of things happened, and now soybeans for the Chinese, they found other sources. Now, there's certain olive branches that China can also offer. Yeah. Gestures. One is just basically, according to the FT, scrapping this Google antitrust investigation on the prevalence of Android across China. But let's face it, that was more symbolic than anything. China or Google doesn't have a meaningful presence on the mainland right now, so they can do that. That could be an easy gift for China to give to the U.S. for good faith. The other one, rare earths, we're already seeing The exports, according to China Customs in August, were at record levels for rare earth minerals and the products, including those magnets that the United States needs. That is a lever that China is definitely going to use and has used in the past. It looks like the export numbers are quite strong in August.
All right, Steve, thank you. Our chief Malaysia correspondent, Stephen Engel there. Of course, let's get the take from UBS, right? They've been talking to a lot of overseas investors, getting more confident, who they say are getting more confident when it comes to China, despite the back and forth on trade as well. Let's bring in Thomas Fang, head of China Global Markets at UBS. Tommy, it's good to see you.
Yeah, it's good to be here.
What's the sentiment like now? I mean, obviously we've seen a rally. Things have slowed down a little bit, but where do we stand now?
Well, we just finished our 22nd anniversary of Asia conference a few weeks ago. So we have seen record attendees, both from global investor and the domestic. The overall, if you look at it on the back of very strong momentum, particularly in August, investors are really looking to China, both the long-term investors and also trading-oriented investors, both domestic and international.
Okay. I want to ask you a follow-up on the trading-oriented clients of the bank here. So what seem to be the preferred strategies right now? Like what have they been doing?
Well, there are a lot of fundamental-driven but short-term oriented clients. Obviously, the AI supply chain has been the focus, but overall, the biotech and the new consumption and then some of the other high beta name has been very much in focus.
Is there still hesitation for many to want to deploy more capital into this market here right now? I mean, in terms of the macro side of things, are they still focused on the fundamentals and waiting for maybe something more there before they actually get more or turn more bullish?
Yes, there are, I would say, skepticism from global investors, especially the long-term oriented patient capital, if you will. So they are looking at broader-based rebound for all sectors, not only just the high beta one, but also, the beaten up, consumption names. The argument is, if it's fundamental plus the liquidity-driven rally with the lower risk-free rates and the risk premium, so it should justify for all sectors to grow. We have seen some of those rotation, and now we see the exchanges and regulator are also putting some messages to calm down some of the more hype sectors and have the broader rallies. Yeah.
So they're waiting. Is it fair to say that the patient money, they're waiting for the macro to turn and for that to look convincing before they reallocate in a bigger way back to the Chinese equity markets?
I think people always, equity investors always invest ahead of the overall macro or economics, if you will. Right. So they want to see clear signals. If it's the anti-evolution campaigns, whether you trickle down into the profitability of the broader companies, and then they want to see liquidity spread broadly, not just a few high beta sectors. Okay. So those are the things they are looking for. We have seen some of the encouraging signs, and we'll continue to work with those investors to find those broader base rallies.
Opportunities,
What do I do with tech now? I mean, what do I do with tech now?
The high growth, high beta.
Well, I think so. This is the key theme, not just for China, globally, right? So this is what drives the U.S. market, and also the good news is the logic become aligned globally. So we have seen global investors looking at the sector holistically, compare valuation. So now, before it's quite hard to compare U.S. versus China. Now with DeepSeek and some of the comparables, they look at the overall tech, deep tech, high-end manufacturing and AI supply chain valuation in a sort of a like-for-like basis. So we have seen investors' overall sort of responses. Yes, the AI sectors, some of the leading names in China has rallied quite a bit, but compared to the forward-looking of 12 to 18 months, it is justifiable. But so this will be a 2-3 year story, so then they will have a sustained a longer-term rally.
What about the other themes that did well going into this one, but somehow got forgotten because of the tech rally? Things like dividends or value plays, for example.
Sure.
What about those other strategies?
But we still see, for example, for Hong Kong, because of there are, very solid number of southbound investors, especially from insurance companies, sectors from China. They are also taking that more conservative approach, looking at, value names, names and also high dividend yield names. So those continue to be a good sectors to look at as well, especially with some of the uncertainty still lingering around tariff.
What do you think could really derail this equity rally? If you look at the rest of the year right now, whether it's trade tensions, whether it is any sort of policy or the lack of stimulus, or what do you think could actually derail this market?
But overall, I think many of the risk factor, I would say, is properly priced in. Okay. There are a few things, when we discussed during the conference earlier this month, could be Chinese, regulator being too heavy-handed in terms of this liquidity rallies. So we have seen, I think, regulator and exchange are relatively cautious in terms of how they guide the market. So that's one. The other one is whether a global market will have a larger sell-off. But with the Fed started easing, so that seems also a relatively manageable risk. So overall, we just need to look at all sectors. I think overall U.S.-China negotiation, the general, I think, consensus, this will be a medium-term, ongoing sort of negotiation. It's not a one-time deals, but the catalyst hopefully will be on the upside either today or the potential summit between President Xi and Trump.
I'm wondering whether, I'm not sure how to state this more diplomatically, but I'll just say it bluntly. I wonder if investors still care about these trade negotiations. It doesn't seem to be featuring in many of these lists of risks to watch. Yeah. There seems to be other good reasons to ignore any potential friction between U.S. and China, for example. So I wonder, does it still come up in your conversations with clients?
It does.
Okay.
So, but it's relatively, I think it's also a reflection of the resilience of the company and the economy. So we priced in, our economists priced in a year-on-year decline of export. But if you look at the data, particularly to the rest of the world, actually overall, China's export has been very strong. U.S. also, down year-on-year down, but it's holding up relatively in a sort of better than expected level. But we need to see the detail, like what Steve said. So what happens during the talk today, and also the ongoing negotiations. But I think China is ready to make an overall concessions and also be prepared. This is not a one-off negotiation. It will be going on into October, into the year end, into next year.
Tommy, it was great to see you. Have a great weekend. I think there's a bit of weather out there, so stay dry, stay in. I have some recommendations, some fairly lackluster TV series out of Netflix. There's a lot of that, by the way. Tommy Fang there, head of China Global Markets at UBS. Right, we are on watch for the BOJ. Could come really any time this hour, now maybe towards the latter part of the hour. So we'd live out of Tokyo next with Sherry to give us a preview of what to expect or not to expect out of the Bank of Japan. Right, welcome back. And left side is the equity market rally, which continues on in the Asia Pacific. Russell 2000 futures, after hitting a first record since 2021, continuing to see some upside, 0.25%. And of course, the bond markets have really been well behaved as the MOVE Index, 3-year lows in that S&P futures bottom of your screen. So yeah, it seems to be a very good place right now.
It seems like we got through the Fed pretty easily.
What Fed?
Remarkably so. And so, is there reason to think that this everything rally can continue? Right? We did speak with Amy Shea Patrick from Pendal Group earlier about, she's mentioned basically it's hard to kind of stay bullish really in the short term in the bond market. Take a listen.
In this environment, it's really difficult for me to get short-term very bullish on bonds. But I do think that, it's a matter of time when you do get this kind of herd thinking and herd behavior happening in equities. And if I start to see more signs that the way equity markets are moving are becoming more and more divorced from the company fundamentals and from the economic fundamentals, then that opens up the gap for a bit of a shock to the system that may cause a bit of a reset in pricing.
All right, JGBs, though, that certainly is one thing we're watching after we saw that 2-year yield, right? We briefly did touch to the highest in terms of 2008, so 17 years, right? So maybe there's anticipation that we might hear a bit more hawkish tone from Ota later on in this BOJ meeting. Let's bring in Shawn, our Asia Trade co-anchor, with a preview of what to expect from the BOJ. So let's first start off with the eco, right? I mean, it seems like it still remains strong. The inflation data today, headlines suggest that things are decelerating, but still above the BOJ target. And still people are anticipating that the BOJ can probably hike later on this year. But the narrative seems to be because of the political situation, they just have to hold today.
Yeah, I mean, but the inflation data that you mentioned, yes, that pushed JGB yields higher, right, with a 2-year yield at the highest since 2008, as you guys mentioned. And it's the expectation that the Bank of Japan won't be able to hold off any longer when it comes to hiking the rate. We're talking about potentially October swap rates now. Swap markets pricing in 30% chance of that October rate hike. But the variables that you mentioned, political uncertainty, that has led some people to push back expectations of that rate hike to come next month, given that we could see some of the lead contenders for the ruling LDP leadership race, for the likes of Sanae Takaichi, who has advocated for aggressive monetary easing. But the economic data is in place, especially after we got more certainty around U.S. tariffs with that trade deal struck with the United States in July. Now we have strong GDP data, strong wage growth as well. So inflation numbers this morning decelerating a little bit on the headline year-on-year growth of 2.7% for core inflation, but take out energy prices as well on top of fresh food, and you get inflation above 3%, which is obviously above the BOJ's 2% target, now running for more than 3 years.
Okay, and can we talk more about the political landscape? There's a date, I believe it's the first week of October. What should we expect, and might that, once we're done with that, then open the door, a clearer path to higher rates, Sherry?
So campaigning starts next week on Monday, and yes, the vote is on October 4th. And the expectation right now is that the lead contenders are, as I mentioned, Sanae Takaichi, who's a hardline conservative, who's advocated for aggressive monetary easing and fiscal spending as well. In fact, before the election last year, she was one of the lead contenders, and she talked about how stupid it would be to hike rates back then by the Bank of Japan. Of course, the macroeconomic picture, as I mentioned, has changed significantly since then, but she's still a lead contender. We also have the Agriculture Minister Shinjiro Koizumi, though, who is seen as more supportive of rate hikes. So just thinking about aggressive monetary easing might not be the right strategy for markets pricing, according to some analysts who think the markets have gotten ahead of themselves. Of course, we have seen this rotation out of bank stocks into real estate, for example, that relies heavily on debt. But recent polls, including Kyoto, showing that Takaichi, yes, is at 28%, but Koizumi is at 23% approval rating. And we also have the Chief Cabinet Secretary Yoshimasa Hayashi also jumping into the race. And remember, the surprise leader of the election last year was Ishiba, who was seen as a more neutral contender. So we'll be watching the top government spokesperson very closely as well.
All right, Sherry. Thank you, Sherry, on there. Our Asia Trade co-anchor on what to expect out of the BOJ. And, of course, when it comes to that election. We're more on the upcoming BOJ decision. Goldman Sachs is going to be joining us next here. They also say, maybe a hold, but, they might have to hold till January before the BOJ actually moves. Much more ahead. This is Bloomberg.
Welcome back. President Trump says U.S. broadcast networks should face license scrutiny if they're too critical of him. Trump had earlier praised ABC's suspension of Jimmy Kimmel over comments about conservative activist Charlie Kirk, and also filed a $15 billion lawsuit against the New York Times. Now, the incidents have spurred worries among Trump critics about free speech in the United States.
Meanwhile, U.S. authorities are continuing to investigate Charlie Kirk's alleged killer, Tyler Robinson. The U.S. Secret Service is said to be looking into the 22-year-old's online and gaming activity. And the New York Times is reporting that that state media from Russia, Iran, and China are using Kirk's murder to stoke conspiracy theories. They cited a report that official media have mentioned Kirk over 6,000 times from September 10th to 17th. Utah's governor, meanwhile, made the same claim in a news conference last week.
What we're seeing is our adversaries want violence. China, we have bots from Russia, China, all over the world that are trying to instill disinformation and encourage violence.
Right, and we're looking at Chinese media right now hitting back at those claims. This editorial you see here on our big screen right now is out of the Global Times, which singled out the New York Times report, saying it's using familiar narrative against China. So the piece actually accuses the U.S. of blame shifting and claims that it's looking to distract from its own problems, including gun violence and political polarization. And certainly when you look at what's happening underneath the hood and how this is being framed, it certainly just points to the very fact that this also clearly has happened, but it's just like the roles have shifted at this point in time, Yvonne.
Yeah, the fact that it's made it into Chinese media is quite interesting as well. But certainly it does raise a lot of questions about what's next when it comes to, obviously we've been tracking, there's a lot of political violence that's been really sparked in America overall. So certainly, we have to continue to watch what this means and really the narrative and moving forward here. So there's a lot going through here, how the state media and everyone is kind of playing this right now. In terms of markets and what we're seeing, right now we're focusing a little bit more, of course, on what's been going on in China, right? So obviously we continue to watch how this rally goes. It seems like right now things are stabilizing just a little bit here as well, but certainly there's a lot to unpack here as we count down to that Xi and Trump call later on today. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break, of course, and we are still counting down to that BOJ decision here, likely to hold, but certainly what Ueda-san is going to say, and of course, and the tone in which whether he will open the door possibly for a rate hike later on this year. I mean, this is after what we saw when it came to those inflation numbers. Core was still pretty strong and above that BOJ target. So there you go. That's why you're seeing that 2-year yield, which we don't have here, but yes, 17-year high for the 2-year JGB yield today. Yeah,
I think 88. The take from our colleagues at Bloomberg Economics is similar to advice if you see a shark out in the waters. No move is the smart move out of the BOJ. There we go. SoftBank, big news there on the Vision Fund. But of course, the percentage tells you much, perhaps, somewhat does a disservice as far as the absolute number of jobs actually within the Vision Fund itself. But it's about a fifth of the head count on the Vision. Markets don't seem too bothered by what's going on. They're 1.2%. The other big story, of course, that's playing out in Japan today, and we talked about the BOJ and this, is really Intel. And yep, there we go. And of course, a massive move up in Intel shares overnight. You have, of course, Nvidia now involved there. The co-developing chips and across the supply chain listed over in Tokyo. You do see some market reaction there going into the morning, going into the lunch break here. There we go on the Nvidia story. We'll talk more about that.
It's certainly an interesting one, right? Because, I mean, these were two rivals for, decades? And now you're talking about some sort of co-marriage of some sort. We did hear from the Nvidia CEO, Jensen Huang, during a conference call with his Intel counterpart, Lip Bhutan. Take a listen.
The two technology teams have been discussing and architecting solutions now for probably coming out to a year. The two architecture teams, well, it's three architecture teams, are working across, of course, the CPU architecture as well as product lines for server and PCs. And so the architecture work is fairly extensive, and the teams are really excited about the new architecture. And so the teams have been working a while, and we're excited about the announcement today.
Let's bring in Robert Lee, our Bloomberg Intelligence senior analyst, on, certainly unexpected pairing of two companies, as Yvonne was just pointing out there. They were competing, and of course now they're somewhat together. Is it worth looking at who the winners are? Are they both winners? in this specific case? How does this work out?
I think the obvious winner is clearly Intel because, just to quote some numbers at you, at the peak of demand that coincided with COVID, they were generating in excess of 20 billion operating profit in a year. That was in 2020. In 2024, that had dropped to a marginal loss. So there's been a massive turnaround in their underlying profitability for reasons we've discussed previously. So there's been a lot of talk today about them being thrown a lifeline, which I think there's a fair amount of truth in, both financially in terms of putting cash in their balance sheet, and obviously this move follows a similar cash injection from the US government of about $5.7 billion. And don't forget as well, I think in the last couple of weeks, we've seen SoftBank also put, I think, $2 billion into them. So there seems to be a coalition of the willing, I'm trying to find the right phrasing there, but a coalescence of companies with, either strong strategic interests in developing the US tech sector, I would imagine as well with a bit of backroom direction and encouragement from the White House, to help re-establish Intel, to at least to stabilize it financially in the short term. But I think still there are major question marks about the growth outlook for Intel.
Yeah, certainly, I guess, bringing some fresh air into the company, but does it get them out of these troubles?
Well, again, as you said in your intro, cast your mind back. Intel was previously the global technology leader in semiconductors until TSMC overtook them. And essentially, they have two businesses. They've got the design business, which is focused on the PC market. And as we know, that's an ex-growth market. The market's fully penetrated. There are limited growth opportunities. There's the server market, where Intel's quite well placed, but they've been under heavy pressure because of competition from the likes of AMD. So there are big question marks there. They never really got into AI in any meaningful way. And then finally, they've been pushing into foundry or trying to push into foundry for, 15 years or so, maybe longer. And again, that's a market dominated by TSMC. So strategically, what are they going to do going forward? They're going to push down the foundry line, which I think under Pat Gelsinger was a sort of direction they tried to take. That didn't really play off, and obviously Pat departed. I think that there is a lot of talk out there, and there's a lot of rationale behind the arguments as to why maybe the company should split ultimately. In the same way that AMD did. AMD hived off its foundry business into global foundries. And, looking back, that was the right strategic thing to do. So I think at the very least that is a major strategic question going forward. There can't be all things to all men. They're lacking growth drivers. We need a very clear, coherent strategy. Cutting costs and all the rest will help stabilize things in the short term, as will cash injections. But what's going to drive the growth of this company going forward? I would say it's more likely on the design side, less likely on the foundry, just because that's an incredibly expensive business to compete in, and they've lost their technical lead.
And for any concerns that this might affect the outlook for TSMC, should we just put those current concerns to bed at the moment?
Yeah, I think so, again, because they've tried and not had a great deal of success. And to be fair, Samsung in Korea has also tried to break into foundry. Right. It's so dominated by the Taiwanese. It's the boat has sailed to some degree. So, I think maybe sentiment-wise there's an impact. But also don't forget that Intel's high-end chips now are actually fabricated by TSMC. So, again, I think that leads you sort of logically, the greatest opportunity for Intel was really in chip design, which is a lot less capitally intensive. It is R&D intensive, but it's a lot less expensive business in crude terms to remain in. But they need to drive, maybe with Nvidia's help, they need to tap into growth markets. And to date, that's something they've really failed to do.
Robert, thank you. Robert Lee there, Bloomberg Intelligence Senior Analyst. And yeah, it kind of brings up some old names like Oracle as well, which basically has really been catapulted into the spotlight here, just given all these AI news and the like. And even briefly made Larry Ellison, the co-founder, the world's richest person, right? And known for its database software, Oracle has recently found success in the red hot cloud computing market and competing against the likes of Amazon, Microsoft, and Alphabet.
Yeah, Bloomberg Originals has been looking into really how legacy tech giant, this specific name, became this massive AI force. Have a look.
True to its name, only Oracle seemed to see this coming.
Oracle is having its biggest jump since 1992.
What a blowout quarter for the software company.
Maybe the stock of the year.
And then, just days later,
TikTok's US operations are set to be acquired by a consortium including Oracle.
Oracle shares spike after it's named as part of the consortium.
What was going on? This was an old-school enterprise tech firm, tickling investors in places only a flashy startup normally reaches.
Because Oracle basically said that they have almost $500 billion of contracts to be earned in the next few years. And that was a shocker.
Everyone was modeling maybe, $150 billion.
It blew away analyst expectations.
Now, Oracle's deeply connected to one of the hottest social media properties on the planet, and behind one of the most ambitious infrastructure projects on the planet.
Oracle had been written off as a kind of IBM-like company. This is an incredible comeback story.
And if you want to catch the full version of that, our subscribers can check it out right now on the terminal. It's also on Bloomberg.com. It'll also be up on the Bloomberg Originals YouTube channel later today. So stay tuned for that in case that's the platform you catch most of your stuff on. Yvonne.
Yeah, we're looking at another sector or a little part of the corner of the tech sector here right now, right? So when it comes to brain technology, right, Chinese startups are really challenging the leadership that we're seeing in the U.S. when it comes to brain technology these days, especially the likes of Elon Musk's Neuralink. Now, with Beijing's support, Chinese companies are building an industry, analysts are saying, could grow 20% annually. And investors are taking note here when it comes to venture funding for the sector this year has already more than doubled what we saw from last year, though when it comes to private funding, the U.S. still has an upper hand. Now, in the stock market as well, though, companies related to brain research have surged. I don't know if you've seen that video of one of these companies in China where it's a paraplegic, Dave, basically trying to play video games or playing video games with just his mind.
I mean, it gives hope, I guess, to some extent, right? And it sort of it addresses some of the issues that I guess in many ways, using that specific example, physical limitations, and in many ways are only limited really by how you think. I guess in some ways as well, this becomes more philosophical. To what extent do we actually have free will? And might computers take advantage of that gap? Anyway, I'm getting into a separate pocket of this conversation. Let's pivot back, though, okay? I'm taking my head back, and I guess that's an example of why perhaps the technology won't work too well.
We might need some brain chips for ourselves.
Let's bring in Amber Tom here with us in sets. Of course, reporting notes that the Chinese government is throwing its weight around behind this field. And I guess, why does this technology matter, Amber, to China's leaders?
Yeah, so as Yvonne was saying, Elon Musk really popularized this idea of brain-computer interface, or BCI. And essentially, it is a technology that captures and decodes brain signals and allows people to interact with and control electronic devices with just their mind. And so far, it's really been mostly used in medical settings to help paralyzed people regain essential functions. But then we can also see vast potential for this technology in a wide range of settings, both in broader medical use and beyond. So one startup founder that I interviewed compared it to the next smartphone, a real paradigm shift in how people can communicate, how people create or use consumer devices, and it can really spawn a wide range of applications in consumer use, in manufacturing, or even accelerate developments in robotics and AI by shedding light on how the human brain works and learns and whatnot. So it is really high stakes, and it is an area that is so high tech that China can't really afford to be behind on.
We were just showing that video from Shanghai Stare MedTech, right? The paraplegic patient that was actually playing a computer game with only his thoughts. Tell us more about what these Chinese startups are doing when it comes to brain-computer interface. How does it stack up to Neuralink?
Yeah, so there is a pretty wide range of brain-computer interface technologies, and Neuralink is still undisputedly the leader in the most invasive, complicated kind of brain implants that are actually touching patients' brains. But China is moving very quickly in clinical testing for a wide range of different approaches. So we have seen some companies give updates this year where patients are able to control bionic arms and drink some water with a cup, whereas that's something they were not able to do before, or even start walking. These are people who are recovering from a stroke and really weren't able to move that much. And in the case of StairMed, that paraplegic patient was able to play chess, play video games, text his doctor, and really have a certain level of autonomy that was not possible for him before.
So I guess for people watching this and looking at, when can I get this implanted in my brain, what would be the first brain implant product that might be commercially available?
So in China, regulators are very open and eager to work with companies and speed up the process.
Right.
And what I've heard is that the first kind of brain implant could be approved as soon as next year. But it will be a relatively simple device that is limited to be has limited use for people who are recovering from a stroke, and you can really only do simple things, definitely not playing video games. So if we're thinking about consumer use or people like you and me having these devices, I think we still have some years to go. It's definitely a very cutting-edge space, but one to watch.
Very interesting, too. Amber, thank you so much for bringing that story to us. Amber Tong there. And that certainly is one to watch on the terminal as well. We're also on, really, Bank of Japan watch. Really, that rate decision could come anytime now. We're going to be speaking with Goldman Sachs' senior Japan economist, Tomohiro Ota, next. This is Bloomberg. All right, we are checking dollar yen here right now. Not a whole lot of movement, as we're saying, leading up to this BOJ decision. Widely expected to not do anything, but yes, those inflation numbers that we got earlier this morning did actually send that two-year yield to the highest since 2008. So certainly that's one to watch when it comes to the JGB market as well. Joining us now is Goldman Sachs senior Japan economist Tomohiro Ota. Tomohiro, it's great to have you. So it seems like everyone in the street thinks that they're going to hold here this time around. Do you think it's really just the politics that's really holding them or keeping them away from really hiking rates? And once we get through that, how soon do you think we could actually see a hike?
Yeah, so basically we believe that the next rate hike will be January from the beginning, so irrespective of those recent political events. So actually we haven't made any judgment on how the politics affects the monetary policy going forward. This is partly because that each candidate hasn't mentioned their renewed policy stance on the monetary policy. In the last year, when they had another LDP ruling party leadership election, then some candidates were a bit more affirmative to the policy rate hike. Some sound like a bit less affirmative to the monetary policy. But we don't know whether they really maintain the same policy stance or not. So one of the candidates, Ms. Takaichi, will make the press conference this afternoon. So I'm sure that the market participants are really eyeing on those things. And so that's why it may be a bit too early to think about those, make a final judgment on those impacts. But anyway, the macroeconomic fundamentals tells that the BOJ's rate hike is not October, but in January, because as the quarterly economic outlook report they published in July this year, they clearly say that the uncertainty remains on the trade policies, and they are watching what will happen in the wage growth in 2026. So they are worrying that the tariff will negatively impact on the wage growth. And that's why maybe they need to wait until January when they observe the Shunto, which is a leading indicator of wage growth, the momentum for those wage negotiation round.
Tomohiro, David here, based on what you just said, it seems that most, if not all, of the risks to whatever consensus we have on interest rates seem to be on the downside. If we remove politics, let's remove that for now. Let's remove the trade uncertainty for now. I know that's difficult to do that, but how much tightening do you think the economy needs right now, given also that real rates are still deeply negative?
Yeah, so first thing first, we believe that the neutral rate, which is our terminal rate focus as well, is 1.5%. So it's much current policy rate is a bit too low. But our expectation that 1.5% will be the terminal rate based on the assumption that Japanese economy will finally migrate from the deflation trap, which we have been for in the last 2 decades, to the new world where the 2% inflation is normal. So basically, that once we confirm those kind of positive momentum that the inflation is sustainable, then this should be enough for the BOJ to raise the policy rate further. I admit that. I fully agree with you that some economic numbers, including a real GDP growth, is not very high. But actually, this does not matter much at this moment, given that the Japanese potential GDP growth is considered to be somewhere around 0.5%, which is very, very low.
Oh.
It's interesting you mentioned January, because it seems like when you get past October, you start to get more complicated into the political agenda, right? This new government likely going to push forward when it comes to some sort of fiscal expansion, some sort of package through Parliament. Would hiking rates, in January actually be a bit of a high hurdle then at that time? And also, I think some policymakers have flagged some concerns when it comes to financial fraud, and particularly when it comes to Tokyo real estate prices. Can they really wait until January?
Yes, so those kind of fiscal risk is a concern, but it's not our base case scenario. Partly because that we do not worry too much about the fiscal risk or the public debt sustainability risk in the short run. Because now, in the last couple of years, Japanese tax revenue is increasing against the backdrop of the high inflation and the nominal GDP growth. But the interest rate for the Japanese government is still very low, so which really helps the Japanese government to reduce the public debt to GDP ratio. In the last couple of years, it's dropped by more than 10% point. So it's so basically that the situation is not that bad. So if the Japanese government makes a fiscal easing, but as long as it is a short-term fiscal spending, and then we do not think that this will harm the Japanese public debt sustainability significantly, which the Bank of Japan have to consider. So as long as the fiscal policies are relatively manageable, so then the BOJ can raise the policy rate because, as they admit by themselves, the current policy rate is too low compared with the level they should be. So that's why it's still hurdle to raise the policy rate in January is not very high, we believe.
Okay. Tomohiro, thank you so much for taking the time to speak with us ahead of that decision. Should come out anytime. Tomohiro Ota, their senior Japan economist at Goldman Sachs. And for viewers and subscribers, Bloomberg clients specifically here, can track our blog, of course, as we go into today's decision. Nothing much is expected as far as action goes, but sometimes it's really it's words that hurt and words that matter. So we'll see what the words come out in the tone of how they say it. Plenty more ahead. This is Bloomberg.
All right, we are about 10 hours away from that President Trump and Xi call, right? So certainly that's going to be the big thing to watch in the next few hours as well, beside the BOJ. But really issues on the table include the fate of TikTok, of course, this potential extension of their trade truce. And certainly the President Trump has talked about that overnight as well. One point of contention that we have to talk about, though, as we highlight just a little bit just now, is soybeans, right? The ag and the agricultural side of things, because the commodity continues to slide from what we've seen from the July highs, right? And the concerns over demand when it comes to U.S. exports. That's because China has basically abstained from buying soybeans from America for some time now. And the first time since at least the 1990s that China hasn't bought any U.S. soybeans at the start of the export season. So you're seeing that white line. This is 2025, basically, and it is at zero. So is this a sense that Beijing is using soybeans as a trade weapon, leverage here in this trade fight with with D.C. China is, of course, the world's top soybean buyer, and consumers are usually relying on U.S. imports between October and February. So this is the time to actually be buying, but they're not. So certainly the U.S. farmers are definitely feeling the pinch now, Dave.
Yeah, I mean, they're looking at their systems. They're waiting for the call because we're to Yvonne's point, we're a few weeks into where we should be a couple of million orders in already as far as soybeans goes. It's not just soybeans facing the cold shoulder, right? China's also curtailed its purchases of things like corn, wheat, for the New Zealand, and that's even as it continues, of course, to source these grains from elsewhere. Okay, that's just about it from us here. We're looking ahead to this phone call taking place 9 p.m. local time today. We're counting down to that, and when you look at implied vol, for example, to the downside, which really underscores the fact that markets don't seem to be too much concerned about this. So this gets us into the weekend. Happy Friday.